up. And the reason I'm insisting is because it looks like there's a little gap, but I'm pretty certain that if you do your calculation, and you could do the calculation by hand yourself, okay, I'm going to try as much as I can to be right on this guy, okay, right there. Oh yeah, right on it. And now it's a lot easier on the second one, because on the second one, I can make sure that my horizontal line is right at the tip, right there. Okay, now, and if one of you wants to come to really check, or one of you people with perfect eyesight, are we right on the bottom here? Okay, as a matter of fact, this says 34.88. Let's see what this guy's low is. If I come here, it says 34.91. So I'm a little bit below it, okay? And then I go all the way here. Now right here, you saw me, I picked to be exactly there. So this is a more accurate, even though it's not quite, I'm a little bit too far below this guy here, okay? In any case, this is fairly close. I'm here I'm like almost pretty much on it. The 100% level is at 6150.99, so 6151. But if I ask this guy what is its high is 6147. So I should have gone a little bit further up, which would have moved these guys slightly further up. This guy would have gone slightly further up. But in any case, right now we are seemingly straight on that 50%, which is at 48.19. And the low of this guy is 48.35. So 48.19, 48.35. You're talking about what, 26 points, but out of basically 5,000. I mean, 25 out of 5,000 would be 1/10 of 1%. Okay. So for those of you who think that these numbers are it's just a joke, some people just create it, they're not. Now, one still cannot guarantee, okay, at which level, but those are indicative of points where you could say, hey, if I'm over here, I don't expect the market to go down maybe, but just to be safe, I'll place a buy order at this level. I'll say if I go down that much, that's a Fibonacci level, it's probably gonna turn around. Even if I buy it, it might go down yet a little bit, but still turn around. So, when you were over here, or you saw it start to go down, you might have said, hey, I'm gonna place a buy over here. Well, what would have happened, you would have caught it, and then you would have seen yourself go up more profit. Now, here's another one. And you could have this trail the stock, meaning that as the stock is going up, you are placing buys 10% below, or something of that nature. So as you're going up, as you're here, you might say, oh, I'm gonna have a buy at this level. Well, it never happened, so you never bought, you didn't lose any money, and so on. So as you're going up here, you might say, hey, I'm gonna have a buy at this level. When you're here, you say, oh, I'm gonna buy, well, you wouldn't want it that close, you would still have it over there, so nothing would have happened. And as the stock goes up, now over here, you would have said, hey, I'm going to buy at this level, particularly when you saw that this guy hit a Fibonacci level and retreated, telling you those levels mean something, okay? And when you were here, you might have said, oh, it looks like we're on a streak going up. No problem, I'm going to put a buy at 2 Fibonacci levels below, because it's not gonna hit it most likely, but if it does, I'm going to make a nice little profit. And indeed, something happened, it went down, and as soon as it hit the Fibonacci levels, went slightly under it and turned around. So you would have bought at about 5,250 and closed all the way up here. And similarly, you could have said, oh, when I'm all the way up here, I'm gonna put a buy at this level. Well, when the market started going really down, you hit your price, and then you closed over here, so you made a bit of money. And here you might say, if we still keep going down, I'm going to have a buy either at this level, or over there, or even over here. But if you place it at this level, as soon as it hit it, it turned around and yes?
Just, if you're looking at like the future, you wouldn't know these Fibonacci levels until this wave that already happened, right? So like,
No, because if I'm here, indeed, if I'm over here, you wouldn't know. But When I'm here, I know what my Fibonacci levels are.
Yeah, I'm just saying, like, before you reach that point. like,
Okay, before I reach that point, here's what you would know. Okay, so we explained that part. So here we are. So let's say the one thing you know is where you start. Okay, that's for sure. So you know that you start here, let's say. Okay, that's not the Fibonacci. That's the Fibonacci. So you start here. So as you move, let's say, I don't know. Okay, let's say at some point we're at this bar. Okay, I'm going to go to that bar here. But first, I have to get rid of all my this. So again, to say what's going to happen, we're going to go from that little peak, and what did we say, this guy here? Or where something like that, okay, it doesn't, and let me start over here. So you don't know, but when I'm, let's say, at this red bar, these are the Fibonacci levels that I know. But then the stock went up, so now you have to update your Fibonacci levels by going to the high of the next bar. Now this is what it looks like. Now this one looks like here. Now this one is a peak, okay? Well, once you hit that peak, do you notice how the next bar that dipped down, how far down did it dip? To which percent Fibonacci level? Roughly the 76%. Just look at do you see the next bar here, that one here? Now, this is what I would have known at that point. I would have known that had this wave. The next bar is that green one with the long tail, and that long tail went to the 76% at that time. And then as I keep going up, up. Now notice something interesting. If I look at this high here, and I'm talking about the price high, so I'm talking about here, okay? Remember that previous bar that we said had reached the previous Fibonacci level? You notice how, looking back, it is now at a Fibonacci level, but of this guy, okay? So there's something nice about the count of Fibonacci, like you will be doing in Project 3, saying, oh, I have one over here, I have another nice one over here. Now this is the starting one. I have all of these. You might say, you know, at this point, there's some interesting things that are going on. Now you might say, wow, a lot of stuff is going on with Tesla and, you know, politics and so on. But nevertheless, the people looking at that, you know, the banks, the hedge funds and so forth, you know, they see this picture and they say, you know, if this were to be a peak, yeah, this is a nice little picture for it. And so another thing that really helps support the idea, it would look really like a nice Fibonacci peak. And maybe that's why when it, notice things hadn't gone down yet, even before, let me move my mouse, even before when we were still going up, when we hit that practically, we went down. Same over here. We hadn't started this big fall, but when we hit that price, we turned around. So again, this is something that you can use to try to determine what's going on. So right now, if you want to take notes, okay, you could say to yourself, hey, is 4,500, well, is 4502 going to be a turnaround point? 4115, a turnaround point. You know, you still have these two options with the market coming down to here or down to here. And remember, coming down to here, you would have had previous evidence that this is a support level. So those are the two things that you would watch. Could happen over the next couple of weeks, okay? If you want to see later on, did any of this stuff make sense, or was he just telling us voodoo stuff? Yes?
So basically, if you were trying to actually like, use this to, like, I mean, you would see that it can just happen,
Mm-hmm.
and then as soon as it starts to go down, you would assume that you should buy.
That's right.
Fibonacci when it's happening.
What you would do is, when you saw, okay, it did this, now as it's doing this, think of yourself doing your mouse move. And as you make your mouse move, you're looking backward at all the confirmations, okay, and counting them to see how well does the picture look like if this were to be a peak, okay? And then if you have some sort of, in fact, you don't even have to wait to see the market come down. You could say, if this is, at this point, for this picture, a peak that we would only know about in the next bar, we can already still say, well, in that case, I'm gonna place a buy order either at this level, or if you're kind of hesitant and you really don't want to buy it, but you want to take that chance, you could say, I'm gonna place a buy order all the way down here. The stock would have to go down quite a bit to hit your point. So you would place the order, but you're not buying it because the stock didn't get there. So it would be like you going to your grocer and telling him, listen, I want to buy some eggs. Right now they're $12 a dozen, let's say. Okay? You say, please, I have an account with you. The moment the egg go to $8, I'm buying a carton, a dozen. Okay, just take money out of my account and put those eggs on the side for me. Okay? Well, if the price never gets to $8 a dozen, you won't get your eggs. But because you placed the order, should the price get down to that, and you feel that's gonna be the cheapest it's gonna be, after that's gonna go back up, you're really happy that you got them at $8, because if you were right, then you see the price go back up to 9, 10. So when you're here, and in fact anywhere, as you're going up, you can see the price, the Fibonacci levels change. You can place your order always like 2 retracement levels before. So for instance, here we are, okay? Let me start over here again. And as I'm going up, let's say that I were here. I could have placed an order at 47.50 roughly, or at 4,500. Do you see those 2 levels? Okay, I can't let go of my mouse, but I am at that peak, let's say right there, and I can say what's the next lower levels of Fibonacci retracement. Those could be where I place my buy order. Well, obviously you wouldn't have gotten anything because the price never got to those levels. Then the stock goes here, and now you say, oh, I'm gonna place a buy order at the next level and the one below. Notice how, interestingly enough, that big down red bar hits perfectly that next Fibonacci level. And then as I keep going, okay, I keep saying buy at the next level. So when I'm here, I could have said, like, for instance, this is a good example. Right here, I am not at an actual peak, but when I'm looking at from here to here, I can see that the next lowest Fibonacci level is this red line. So while I was here, I could have said, place an order to buy at that red line, okay? Well, I was here. The next bar, it opened here, it closed here, but in the meanwhile, it did reach all the way down to that, triggered your order, you bought it, and then it went right back up to this. So you would have bought at about, whatever that number is, 51.34, and you would have seen yourself close at 56.44. That's a difference of 5 out of 5,000. So you're talking about 10%, a 10% gain. Yes?
That one's also like perfectly on the line.
What's that?
The one at the very end is also like perfectly on the line.
Okay, what about that one at the very end?
It's also on the.
Well, it is also, but remember, at that point, you see where my yellow arrow is, you are on that day. That day just finished, let's say it just closed, okay? Because you don't, when do you know that the high was the high? What time do you have to wait for before you know that the high was a high?
At close.
At the close, because until the day closes, you just don't know what could happen, okay? I mean, I still remember, yeah, that's before I knew all this stuff. I was in a stock that was at $17. And I think I had 1,000 shares of it. Okay. And I said, oh, I had made a little bit from it. I'm gonna sell it. And I sold it. And literally, 1 minute later, it went to $65. From $17, it went to $65. I thought that's a glitch, it can't possibly be. It was there for a long time afterward. And I said, I sold this 1 minute before this happened. So I sold it at $17, and then it went 1 minute. I don't know. One could look it up. I was at Nielsen Media Research at the time, so this happened sometime between 1990, okay, I left in 1990, in 2000. So around 1999, 1998. I forget the name of the thing. I think it was Traumatic, so I just put it out of my memories. But in any case, so when you're sitting over here, you can see your Fibonacci levels, or you can calculate them, and you can simply say automatically, every time, you know, my stock goes up, I look at the previous rally, I look at the Fibonacci levels, and I don't want to take too much of a chance. So I say, it's never gonna happen, but I'm gonna place a buy order, it's free. You know, in this case, we're sitting up here, so we're on this bar, so the high is 56.69. Okay, the close was 55.22, okay? And I look, so I'm at 55.22 when I close, and I said, well, you know what, my next Fibonacci level is here, and another one is here. You could have been super careful and said, let me place my order here, and nothing would have happened, okay? Or you could have said, I'm gonna place it here, and on the next day, you would have seen it go down and reach that point, okay? Now, you say, well, what about this guy here? Well, we wouldn't have known about this guy because when we do this thing over here, we look only for our order for the next bar. Now, what does happen is if you then, you know, let's say nothing had happened, okay? Now, you are going to be moving to the next bar. So I'm here, okay? Remember, we at one point were over here, and we said place an order on the next Fibonacci level. The next bar, which is this guy, would have hit it. Then it moves up. Well, you still have to be higher. You can't be here. This is no longer valid because the previous bar pierces it. But when you're here, you would have placed an order at the next lower level, which is about 52.50. Nothing would have happened. Here, nothing would have happened. Here, you look at the next bar, nothing would have happened. Nothing would have happened. Nothing would have happened. And over here, you say, let's put it at the next. Now, look at this one here. Once you reach this level, oh God, I knew this was going to happen. Once you reach that level, so let's remove all the trend lines, let's go back. That's the one thing I don't like about this tool. You gotta, I guess if you have a mouse, it's a lot easier. But once you got to this high over here, you know, you might have said, hey, you know what, it's been going up, 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 up. It's gonna keep going up, but you know what? I'm gonna place an order for the next lower Fibonacci level. It's probably not gonna happen, so who cares? So you place an order for the next level, which is right here. Okay, what happened on the next bar? Poof! Hit it, bought it, close up. How many of you still think that those Fibonacci numbers are just some random, this is just a statistical fluke or whatever? Oh, I don't see any hands go up anymore. Now, the story's not all over. What I'm doing here with you, incorporating into a project, helping you learn how to design things, okay, is sharing my research. You can do that. There's not a single one of you in here who can't do this kind of stuff. Particularly, this is, at least from my perspective, fairly easy stuff. And it marries a lot of things. It could be just, you know, data science. I just want to take that data, clean it up, display it, and so forth and so on. Recognition. Hey, I want to recognize certain patterns. You can do that. Or, hey, stock market stuff. I want to write a little application that will allow me to predict things. Or a little application that will look at a wave, and upon looking at a wave, will tell me how well things look like before. After all, you might say, well, maybe this is not a really good wave. But then someone could say, well, how is it not a good wave when you look back and you see how it was perfectly here, it was almost perfectly here, there's a lot of resistance right at that particular level. This is not some random wave. It's not as if it was doing this in the middle between two waves. It's like right next to one over here, okay? You say, and then you say, well, if as we just saw, when this thing was making a wave from here all the way up to here, and at that point we said, let's put, and at that point, the next Fibonacci level was like here. We said, let's buy there. Look at what the next bar did. Do you think that there's not other people or other algorithms maybe doing that? And then you kept on going, and when we're at this point, even though everything seemed to show that, hey, this stock is gonna keep, or the S&P 500 is gonna keep going up, well, just in case, let's place a buy here, and boom. So you could have an algorithm that does exactly what your project 3 is going to be doing. Okay, it starts at a particular level, goes up, and at every new high, calculates the Fibonacci levels, sees the next couple of levels down and say, I do a buy on that, and I'm selling at the close. And then you say to yourself, how would this have worked over time? And that's where you add to the project. You don't have time to do that, but you can, where you do this analysis all the way back. That's what is called paper trading. Well, in this one, that would be a little, they have a name for that. Why does it escape me? Where essentially you have a track record of your algorithm. You can go somewhere and say, here, I ran my algorithm on the S&P 500 since its inception, and this is how well it would have done. Okay, and you know, and someone could have said, well, okay, you did it looking at this. Could things have looked differently if instead of starting at this valley, you had started at another good valley, which is this one, let's say. So you say, yeah, I'm only looking that far back, I'm not looking everywhere else. You could have said, okay, I'm here, and let's go to, see that thing slipped off my finger, and so that was it. I wish they had an easier tool to use, but anyway, I could say, well, what if we had started looking here, and let's say I had been over here. At that point, you would have said, I'm going to buy at the next lower, so the 76% Fibonacci level. This would not have given you anything, okay? You keep going, you're at this one, and this one would not have given you anything because you're looking so far back. So maybe this teaches a lesson that, hey, you should be looking at a valley that is relatively close. And in that case, you might say, well, in that case, Dr. Janti, you should be looking at this guy. Maybe you should be looking at this valley going forward. Say, okay, let's take a look at this valley going forward. And when we do that, and you're at this particular point over here, okay, like this, I'm trying to get to the high, okay? And you say, well, if I were here, I would have bought over there, and you would have lost some money because it closed lower, okay? So there is still stuff to look at because you say, how do I pick where I start? Do I start from here? Do I start from there? Do I start from there? Okay, well, that's the whole point of research. But what you learn is that, hey, the Fibonacci levels are not random. If they were, there wouldn't be all these other people looking at them somehow, making decisions off of them. Places like Interactive Brokers and any of the other brokers that allow you to trade or that let you look at stock, none of them would be giving you a Fibonacci tool that allows you to see all the different levels and so forth. And then people do that because once they look back and they say, well, let me look at that tool. Let me go from here to here. They say, oh my God, yeah, when I go from here to here at the Fibonacci levels, that's exactly where the stock bounces. I may not be able to say if it's going to bounce at 76, 50, or 28, or 26, but still you have information. At least you know, well, it's not likely to bounce in between. And then if you're scientifically minded, you say, you know what? I'm just going to run this whole thing and I'm going to find what percentage of time it bounces on this, or it bounces on that, or it bounces on that. I'm also going to feed it into a neural network, where a neural network might more easily be able to say, under these conditions, it bounces at 78%. On these other conditions, it bounces at so much, okay? And now, one final thing for you is, we all know that, how many of you are following what's happening with the market right now? How many of you are not? You should. Okay, that's my piece of advice for you, for your life, financially and otherwise. If you don't look at that, if I ask you that at an interview, but that's me, okay? You're not paying attention, I will much less likely consider you for a position. I say, this person is not interested in what's going on very importantly in their world. Now I understand, I wasn't interested in the market when I was your age, not at all. Okay? I wasn't interested until I turned 40, and why? Because someone saw the work I was doing, which wasn't really related, but it's pattern recognition, and say, hey, we can use you for that. That's how I got to learn about all of this stuff for the past 25 years, okay? But you're fortunate enough that I can tell you right now, pay attention to it. And by pay attention, I just mean, take a look at the chart. Go to Yahoo Finance every time and so forth. Now you have a project that you can use and say, let me see what my project tells me about that, because that data you can get for free. You may not have it on Canvas right now. I think I might put it up so that even after this, you would have the data until at least this week or next month or whatever. Okay, I'll add one more file if I can get the S&P 500. But you can also go and get that. I mean, Yahoo Finance used to give you a spreadsheet just like the one I put up. That's how I got mine from Yahoo Finance, where it could do that. And you could then use your Project 3 app to look at things and say, hey, does this thing actually seem to work? Are those Fibonacci numbers meaning something? And what you can then do, as I said again, is feed that information. Now you have to think about how you design that. That's also the software design aspect of that. What do I feed to my neural network? Okay, and what you would want to feed is exactly those rectangles that I've given you, and the number of confirmations, okay, that you would obtain, and then you tell it the lows. Let's say you do the up wave, then you would tell it, these are the lows that I had on the next 3 bars. So every wave that you have, you give it the wave and the next 2 bars low, or just the next 2 candlesticks, and see if it can learn that, when there's an up wave, we tend to have a low on this retracement. You're not doing anything. You're just letting the machine measure the statistic. Here's a wave, okay, I could say, here's a wave from here to here, and then you tell it, this is what the next candlestick looks like. Then you say, here's a wave from here to here, that's what the next candlestick looks like. Here's a wave from here to here, this is the next candlestick, and so forth. Here's a wave from here to here, okay? You might also help it by giving it the Fibonacci numbers and so forth, and say, here's the next candlestick. This thing, if there's a pattern, would say, every time you give me a candlestick, well, the low, okay, and it might say, 20% of the time hits the Fibonacci level within 2%. That number would be astronomically high if that's what it actually did. Well, you can find out. You can run all of that, okay? That would be your gentil project for your life, for later. If you're interested, I know you have other things you want to do, that's fine. But for those of you who are interested, that's the kind of thing you can go and do. And if you want to work on a project like that with me, you can come and say, hey, Dr. Lancy, could we work on that? Absolutely. I had a couple of students who did that. And I tell you, if you're not graduating this semester or next semester, you'll have plenty of time to have something that I guarantee you would guarantee you a job if they learn about that on their interview. You hear the word, guarantee you a job? Did we hear that word? Except there's one problem with all that. That job may not be what you're interested in which case, don't take it. Okay? Someone said it well. I wish I had the quote. If I find it, I'll put it out for you guys. Don't compromise your interests. Don't pick a job because, oh, it could give me money. Pick a job because you're interested. Don't pick a job because this is hot. This is great. Things that are hot come and go. Your interest will stay with you probably most of your life. So that's what you want to do. But this is interesting. This is money. This is your financial future. This is how you get to send your kids to college when they decide to do that, or wherever they want to go study. Okay? This is your retirement. Something that allows you, because do you think that a lot of people are crying right now with what's happening to their 401k plan? Do you think so or not? How many of you have spoken to your parents about, hey, mom, dad, how's your 401k doing? Another thing, now I don't know what level of intimacy you have with your parents, because sometimes people don't talk about things like that. They don't talk about money with their children, but you're not children anymore. And you might want to be able to introduce and say, hey, I've learned certain things in this class about the market and so forth, and how's your 401k doing? Some people have lost 20%. And if you're close to retirement and you were hoping to retire with, I don't know, $500,000, and now you got $400,000, you know, it affects your plans. So, okay? Well, we did go on a bit long on this thing, but I wanted you to see that your project is not something out of the blue that I created to just give you work. I gave you something that will help you learn to design software, actually write code, use tools like ChatGPT, Copilot. At this point, we're at the phase where we're going to see, hey, how do we now make the data structures of the classes for project number 3? But more importantly, a real practical course using real world elements, things that are happening right now, and that you could practically predict. I mean, this thing here, you were able to see how this would bounce here or here and so forth, and Project 3 does that for you. You give it a wave, and it looks back and see, you know, does it really fit the model? Are there any, you know, bounces right up the Fibonacci numbers, okay? And so, all right. Now, project is posted, starting next time, so on Thursday. We'll be designing, but more importantly, have your questions. You know, that's really what we want. I want to see that you're thinking about this, that you're thinking of different approaches, and by asking questions, even if it's, I know my approach is great, that's it, you think that. You might still want to, you know, confirm that and say, hey, this is what I'm doing, is this good? And you might be surprised, I might say, oh, this is pretty amazing. I've never thought of that. I've never seen that. This is fantastic. This is great. It happens a lot. Okay? You may have something really great. You don't know about it. The person who knows about it is sitting a few feet away from you, but you don't ask a question. And you never know that you had this gem that you haven't approached. If you read things, the scientific literature, you'll see the number of students who were awarded, not a prize, but an article or something because they proved something or they did something that people didn't think was really possible and all. Why? Because they're able to express it, and now with all the media, you know, you can put your stuff up on some, you know, blog and say, hey, you know, this is my approach and so on. People say, whoa, wait a second, you just discovered something interesting in your approach or whatever. So if you think you have an idea, let's talk about how you plan on doing your project number 3, okay? And that will be that. All right? All right, gentle people. Pay attention to the market, and I'll give you ideas for your project 3. Yes, Ms.
I have a question. Should we charge this very representative person to cover the
You got tests this week?
Go for it.